Welcome to Countarts. In this lesson, we're going to be looking at a grade 12 question paper, Accounting Paper 2. We're specifically going to be looking at the question on bank reconciliation. And so if you don't know how to do it, if you are struggling with doing the bank reconciliation, I hope this lesson will be helpful for you. So let's have a look at this question here. You can see that we are given a scenario and we're given a lot of information here. And so the first thing that you want to do is to make sure you can make sense of the information in your mind. Now, we have done another lesson on bank reconciliation and we went in great detail in explaining what bank reconciliation is, what you look out for, and we went through an example of completing the bank reconciliation statement. So if you'd like to have a great understanding of bank reconciliation, you may want to check out that lesson as well, or even start with that lesson and then come back to this one. But this one also should help you understand it much better. You'll find the link to that lesson in the description below. So we're going to be looking at the question 1.1, and you can see 1.1.1 asks us to calculate the following on the 30th of June 2023, the correct totals for the cash journals. Use the table provided in the answer book. Now, of course, with the grade 12 question paper, you know that you're provided with an answer book, which makes your work a bit easier as opposed to you having to do everything, including the format yourself. And so I have already duplicated the answer book that was given, and here it is, question 1.1.1. And then here we have 1.1.2. So let me just correct that. And this is specifically the bank reconciliation statement. So this is exactly what is on the answer book. So just put it in Excel so that we can use the formulas as we go along. So the first thing that we're asked to do is to calculate the following. And the first thing is the correct totals for the cash journals. Now, what do they mean by the cash journals? Well, you can already see here, they are talking about total receipts and total payments. And so this one here would be what you would see in the cash receipts journal, the total receipts that is, and this one here, the total payments, would be what you see in the cash payments journal. So whatever money came into the bank account will be recording here. Whatever money went out of the bank account will be recording here under total payments. So let's go back to our question here. What is the first thing that we are looking out for, or what is the information that we are given? Well, here's the information. We're told that the bank reconciliation statement on 31 May 2023 showed the following. Now, what is a bank reconciliation statement and why do we perform it? If you've checked out our other lesson, I'm sure you already know the answer. We perform a bank reconciliation statement because what we are recording in our cash book, what we are recording as the money moving in and out of our account based on our cash book, might not match what is happening with our bank statement. So when we bring our bank statement and we see the movement of money in and out of the account, it might not match what we have in our books. So we have to reconcile the two. That is where we have what is called the bank reconciliation statement. Now, we are asked to calculate for 30 June 2023. We're also asked to prepare the bank reconciliation statement on 30 June 2023. So we know we are preparing for the month of June, but we are given the bank reconciliation statement for the month of May 2023. That is very important to take note of because sometimes students make mistakes with this. They think that this is a bank reconciliation statement for June, while it's written May 2023. And so if we did a bank reconciliation in May, we're asked to do the one for June. What is the implication of having the one for May? Why are we even given the one for May? Well, you will see where it comes into play just now. And here it is. When we prepared the bank reconciliation statement in May 2023, it displayed items which were in our books, which has not yet appeared in the bank statement or needs to be corrected by the bank in the bank statement that is. So anything that didn't appear in the bank statement for May but appeared in our books correctly will appear in the bank reconciliation statement. Okay, so all these amounts you're seeing here in the bank reconciliation statement either didn't appear in May's bank statement or the bank had made an error and they needed to make a correction on that. Okay, now why am I saying that and why is that important? That's because anything that appears in May's bank reconciliation statement, I'm expecting to see it appearing in this month's bank statement. Okay, so I'm given the bank reconciliation statement for May, and I'm also given the June bank statement, this month's bank statement that is. We're talking as if we are in the month of June 2023. And so this is the bank statement for June. So everything that appears in my bank reconciliation statement, I'm expecting to appear in the June bank statement. If it doesn't appear in the June bank statement, we must look at the additional information that we're given down here to see what the issue might be. Okay, so that's one thing that we need to do. And then we also need to take note of amounts that are appearing in our bank statement but are not appearing in our books. Whatever appears in the bank statement but doesn't appear in our books, we will need to record it in our books. Okay? And what is our books here? Well, that is the total receipts and the total payments. So whatever is appearing in the bank statement and didn't appear in our books, we put down here. Okay? If it's money that came in, we put it on the total receipts. If it's money that came out, we put it under total payments. Okay, so let's go through the information and see what we have to do here. We're given the bank reconciliation statement. So we're going to start with 1.1.1 here, right? And also we are asked to do the bank account balance in the general ledger. So we have to finish the totals of the cash journals first before we do the bank account balance. All right, so let's go through the information here. We've got outstanding deposits and outstanding EFTs, and you might know it as outstanding checks, but remember, checks are no longer used in South Africa, so now it's EFT, meaning payments that have been made. So under the bank reconciliation statement, we have the first note. The cashier reported that the cash to be deposited on 18 May was stolen while she was on her way to the bank. This amount must be written off. Okay, so the cashier reported that the cash to be deposited on 18 May. Which one would that be? Well, that would be this one here. Now remember the theory that I've just mentioned, and you might want to go back and re-listen to what I've just mentioned, because it's extremely important in being able to do a bank reconciliation question. Now here's what it's saying: that the cash to be deposited on the 18th of May was stolen while she was on her way to the bank. It means she was not able to arrive at the bank and cash in so that it can appear in the bank statement. So what we're being told here is clearly saying that this amount here that was to be deposited on the 18th will never appear in our bank statement because the cash was stolen, so it's no longer there. However, when we received the cash, we did actually record it in our books. And you can see here, look up here, outstanding deposits, 18 May 2023, 30,000 Rand. Now, that means that we had recorded this amount in our books, but now that the cash has been stolen, we need to remove it from our books. So whenever we receive cash, we record it as a cash receipt, okay, money coming in. All right, so that's what we did. The cashier received the cash and immediately recorded it in our books as a cash receipt of 30,000 Rand. But since the cash was stolen, we need to reverse it from our books, okay, because it's no longer going to be deposited in the bank. So we need to remove it from our books. So we usually put our amounts that came in under cash receipts, but now that it has been stolen, we put it under cash payments, okay. So we're going to put the 30,000 Rand under cash payments. I hope that's making sense. When money has been stolen, or when they say that you had received money and it was stolen before you deposited it into the bank account, you have to put it under cash payments. Of course, you're not paying out that money, but for you to reverse what you had put under cash receipts, you now put it under cash payments because it's no longer there. Okay, so that's the first thing that we do on the first information that we are given. So clearly, as I've just mentioned, this 30,000 Rand, you can see, will never appear in your bank statement because we're expecting it to appear in June's bank statement. Okay, but you can see that 30,000 Rand is not here. Okay, another thing to mention here in the bank statement, whatever you see, remember, you must know by now that bank is an asset and bank is debited. So whatever is debited is what's coming into the account. Whatever is credited is what's going out of the account. But if you watched our earlier lesson that I've alluded to, you will remember that whatever we see as a debit on the bank statement is actually money going out, and whatever we see as a credit on the bank statement is money coming in. Don't confuse the two, okay? Whatever you see on the bank statement on the debit side is actually the opposite of what we are doing in our books, okay? Debit means money going out on the bank statement. Credit means money coming in on the bank statement, okay? And we explained that in our earlier lesson. Why is that being done that way? Well, because from the bank's perspective, the money that they are holding on your behalf is not theirs, it's your money. And that's why they're putting it on the credit side. And so you can think of it as a liability from the bank's perspective because they owe that money to you. It's your money, it's not theirs. And whatever is on the debit side is what went out of our account, so that means the bank no longer owes us that amount, if you will. Okay, so you can think of it in that way, but you don't have to get bogged down with that information. You just have to know that, you know, look at the bank statement. The debit side is money going out, the credit side is money coming in. So let's see here. I'm expecting to see these outstanding checks and outstanding EFTs in June's bank statement, okay? Whatever is in May's bank reconciliation statement or whatever is in last month's bank reconciliation statement, I'm expecting it to appear in June's bank statement. If it doesn't appear in this month's bank statement, I need to look at the information and see why it didn't appear, okay? So let's move down. You'll see this. 30,000 Rand, you can see already we've accounted for that. It will not appear in the bank statement because it was stolen. That's why we just had to reverse it from our books. The 18,000 18,200 Rand, 30 May 2023. That's the outstanding deposit. You can see there on the credit side, 18,200 Rand. And that's what I meant to say money coming into our account is a deposit, but it's on the credit side on the bank statement. Okay, 18,200 Rand. So that's all good. You don't have to do anything regarding that. So let's just highlight this one here because it's already matching what's in the bank reconciliation statement. It's appearing on the bank statement. So it's all good. We don't have to do anything. And you want to get into the habit of highlighting or ticking what you don't have to account for anymore because you can see that it's matching. Okay. So whatever is in last month's bank reconciliation statement and appears with the same amount on the bank statement for this month, then you can highlight it because you don't have to do anything regarding that because you've already accounted for it last month in your books and it's appearing in the bank statement. So it's all good. Now, what about the EFTs? 7,400. Let's look at the debit side. 7,400. I don't see any 7,400 on the debit side of the bank statement. So let's look for the information relating to that. It's EFT 816 to Ace Stationers. And you can see here is a note. EFT 816 to Ace Stationers is correct on the bank statement. Okay, so we don't see the 7,400 Rand, but I can see here EFT 816, all right, on the bank statement. And here on the bank reconciliation statement for last month, EFT 816, it's 7,400. But here on the bank statement, it's 4,700, okay? So one of them is wrong. If you're seeing the bank reconciliation statement for last month and compare it to the bank statement for this month, and they have a different amount even though it's the same check, they will give you a note and they will tell you which one is correct. And we have just been told here that the bank statement is actually correct. So our books are wrong. So we need to make a correction in our books, okay? Remember, when a bank makes the mistake, we record it or we correct it in the bank reconciliation statement. And by the way, we are asked to do that bank reconciliation statement for June. Okay, so we need to do something similar to this for June, but we will get there. All right, for now, we want to correct whatever is in our books. If we made a mistake in our books, we need to correct it in our books. If the bank made the mistake, we need to correct it in the bank reconciliation statement. So since the bank statement is correct, we are the ones who made the mistake. We need to see how we're going to fix this mistake. Well, we had recorded it as 7,400 Rand, okay, as money that went out of our bank account. However, it was supposed to be 4,700 Rand. So we have overestimated that expense, okay, or that EFT that we made out to Ace Stationers. So how much did we overestimate it by? Well, we need to take the 7,400 minus the 4,700 and we will get how much we overestimated our cash outflow by, or money going out by. Okay, so if we've overestimated the money that went out in our books, all right, we made the mistake and we put a higher expense or a higher payment than we should have, we now need to put the difference on the cash receipts. So we're gonna take the 7,400 minus the 4,700. Let's do just that. We go here, you write the 7,400 minus the 4,700 and you press enter. You see the 2,700 Rand. Okay, now why are we putting it on the total receipt side and not on the total payments? Well, because on the total payments we had actually put the 7,400, which was incorrect. So we need to reduce it down to 4,700 and we reduce it by putting the difference on the total receipts column. Alternatively, you could have put the 7,400 on the total receipts. So let me show you 7,400 on the total receipts. And then on the total payments, you now put the correct amount of 4,700. Okay. Now, what is the sense behind that? Well, remember the 7,400, you had put it as total payments last month. Okay. But now you want to reverse it. So you put it on the opposite side, 7,400, to completely remove it from your books. And then now you're recording the correct one. Okay, it's exactly the same thing as what I've done here by just putting the difference on the total receipts. So whichever one works for you is fine. So you want to make sure that you just capture what is going on there. If we overestimated our payments, the difference between the payment that you overestimated minus the correct amount that it should have been, you put it on the opposite side. If we overestimated our total receipts, let's say you had recorded 10,000 Rand as a receipt from one of your customers, okay, and you are told that the bank statement actually recorded a correct amount of 6,000 Rand. That means I have overestimated the receipt. That means the 10,000 minus the 6,000 Rand is 4,000. I need to put the 4,000 on the total payments. That's if I had overestimated the receipt in the example that I just mentioned. All right, I hope it's making sense. And one thing that I didn't mention here, you can see here under B, cash journal totals on 30 June 2023 before receiving the bank statement. Cash receipts journal 81,300 and cash payments journal 80,620. And you can see those are our opening balance, all right? 81,300 for total receipts and 80,620 for total payments. Like I said, total receipts is from the cash receipts journal, total payments is from the cash payments journal. So you will see these amounts that you are given here. So you may not have been given. Remember, the answer book gave us the opening amounts. Okay, they didn't have to give it to us. We needed to know that we should have taken the totals for cash receipt journal and the total for cash payments journal. Okay, that's the totals at the end. You take it and you use it as your opening amounts. So let's keep moving. So we've already corrected EFT 816, so I need to highlight that one and highlight this one here, right? So that I know I'm done with that one. I don't have to revisit it. What about the 19,300? EFT 817, and I can see here EFT 817, 19,300. So they match. I don't have to do anything regarding that. Right, so I can just highlight them. Oh, and I forgot to highlight the 30,000 rand, so let me highlight that one there because we've already made the adjustment. All right, and then of course I can highlight this one here. We already did it, and the information I was given, the first one here. Okay, so let's continue looking at the additional information that we're given. We're told EFT 792 to BK Builders was incorrectly recorded in the June cash receipts journal. So what does this mean? We made a mistake in our books. Remember, whenever we make a mistake in our books, we need to make a correction in our books, and that would be what we are doing up here, the total receipts and the total payments. If we made a mistake in our books, we make the correction here. If the bank had made the mistake, then the correction would have been done in what we're asked to do in 1.1.2 in the bank reconciliation statement. So what are we told here? We're told that the EFT 792 was incorrectly recorded in the June cash receipts journal. Now, let me ask you, what do you think is the problem here? Well, you can see that we have on the debit side 6,200 rand. And I mentioned if you have a debit side of the bank statement, the debit side means money that left our bank account. But what did we do in our books? We recorded it in the cash receipts journal as if it's money coming in. And we are told that we incorrectly recorded it in our books. Okay, so we need to make a correction of that. So we recorded it as money coming in as opposed to money going out. So how do we make the correction? Well, since we recorded it as money coming in, we need to make the correction on the total payments by putting 6,200. But we are not done yet. We have just corrected the incorrect entry that we had made. Now we need to record the correct entry that we were supposed to make on the total payments or on the cash payments journal. Remember, this entry was initially supposed to have been done in the cash payments journal, but it was done on the cash receipts journal. So not only are we reversing the amount by putting it on the total payments, we also need to record the total payments of 6,200. So I just need to add another 6,200 here. All right, 6,000 plus 6,200. Okay, 12,400. I hope it's making sense. If I recorded something in the cash receipts journal that was supposed to be in the cash payments journal, you'll have to put double the amount on the cash payments journal. One is for reversing the error that you had made by recording it in the cash receipts journal, and the second amount is recording what was supposed to have been recorded initially. And that's what you always need to do. Let's say you made a mistake by recording something in the cash payments journal, even though it came into the account. Let's say it was 2,000 rand that came into the account, but you made a mistake by recording it in the cash payments journal. So you need to first correct the error by putting it on the total receipts column as 2,000 rand, but also record another 2,000 rand to capture the amount that actually came in. So it's going to be 4,000 rand recorded on the total receipts. So you're recording double the amount if you made an error by recording it on the opposite. I hope that has made sense, and I hope you'll know what to do going forward. So we can highlight this one here because we've just completed it. All right, and we also highlight the 6,200 here. So far so good. Remember, so far we have not been given anything where the bank had made the error. All right, it's just been us making the error. And then cash deposit fee 320 rand. Okay, before we even go through the bank statement, let's keep reading the additional information. The direct deposit by G Glen was for monthly rent. Okay, direct deposit by G Glen, and you can see here direct deposit G Glen 14,600 rand. So what is happening here? Well, G Glen here made a direct deposit into the bank account. Now, if they made a direct deposit into the bank account, we have not yet recorded it in our books. Okay, so any direct deposit which is made into the bank account, we will only record it in our books when we receive the bank statement. And so that's a tip for you. Whenever they tell you someone made a direct deposit, you know that you will only know of that direct deposit when you receive the bank statement. Remember, this is an older way of doing bank reconciliation when you didn't receive a notification, when you didn't receive instant notifications of any activity in your bank account that money has either come in or gone out. And so you do have to wait for your bank statement for you to see what has not been captured in your books. And then you would now capture it. And so whenever they tell you that the direct deposit was made into your account, you need to record that direct deposit. And you can see here we are given direct deposit Jigland 14,600 Rand. And so if it's money that came in, remember it's on the credit side of the bank statement, we have to record it on the total receipts column. Okay, so we're going to put here 14,600 Rand. Easy enough. Let's highlight that one, the information here, and the 14,600 which is sitting on the credit side of the bank statement. Let's continue. EFT 818 to VX Garage was for repairs to the company vehicle. The owner neglected to submit the transaction record slip to the bookkeeper. No entry was made in the books. And so you can see EFT 818 is appearing in our bank statement, 3,780 Rand. So we have no issue with the bank statement. However, it's not been recorded in our books. That means we'll have to record it under the cash payments journal or the total payments column. And you can see we're told no entry was made. So it made it easy for us to know it's not been recorded in our books. We have to record it under total payments. Why is that? Because we made the payment, all right? EFT 818 was for repairs to the company vehicle. And they didn't have to tell us that no entry was made in the books, okay? Because they have already told us that the owner neglected to submit the transaction record slip to the bookkeeper. So if the owner neglected to do that, that means the bookkeeper is not aware of it until now that we've received the bank statement. We realize money was paid out and the amount here is 3,780. Now we need to record it in our books. So usually when they tell you that the owner has not informed the bookkeeper, or the bookkeeper is not aware of it or was not aware of it, then you know you have to record it in your books. Okay, so now let's go ahead and record it in our books, 3,780 Rand on the total payments column. Okay, that's easy enough. Let's go ahead and highlight that one because we are done with that one, and then we highlight 3,780. Next one, the monthly transaction fees were duplicated in the bank statement. And you can see here we have transaction fees and transaction fees 540. So it has indeed been duplicated in the bank statement. That means the bank made the mistake, and so the mistake is in our bank statement. Where do we correct that error? I hope you're already saying bank reconciliation statement, because if the mistake is with the bank or with the bank statement, we record it in the bank reconciliation statement. The mistake is not with our books. Secondly, the transaction fees here are like bank charges. We are only recording it when we receive the bank statement, okay? Because we'll only know how much our bank charges are when we receive the bank statement. And so we need to record the transaction fees of 540 Rand in our books, okay? So what you need to know is that any charges which were levied by the bank, and you can see we have transaction fees here of 540 Rand, but we also have cash deposit fee here 320 Rand, okay? So we have cash deposit fee 320 Rand. In fact, let's record that one first. Cash deposit fee 320 Rand. It's sitting on the debit side of the bank statement, which means it's money that went out, okay? And it's cash deposit fee. So the fact that it's written cash deposit fee, you know that it's a fee that was charged to you by the bank. And then the next one we have here is transaction fees 540 Rand. So we need to record that in our books as well, because we did not record it at any point in time until now that we have received the bank statements. So remember, when they give you the transaction fees or they name it as bank charges, you know that you have to record it in your books because it's appearing on the bank statement and you only record it when you receive the bank statement. So 540 Rand, we record it on the total payments column. All right, and then you can see another one here. We have interest 240 Rand. Now, is this interest income or interest expense? Well, I hope you already know that it's interest income. Why is that? Because it's sitting on the credit side of the bank statement. So that's good for us. We earned interest of 240 Rand. And remember, interest as well, we're only recording it when we receive the bank statement. So it would not have been recorded in our books previously. So let's take that into account. So let's record 240 Rand on the total receipts column because it's sitting on the credit side of the bank statement. Okay. I hope that was easy enough. Whenever you have bank charges, you record it in your books, okay? Now, this second 540 Rand is the mistake made by the bank. We're only going to record it in the bank reconciliation statement. We'll get there and we'll record it. So let's highlight the 320 Rand, the 240 Rand for interest income, and the 540 Rand transaction fees. Now, this other 540 Rand is a mistake by the bank. It's a duplicate. We'll need to record it in the bank reconciliation statement, as I've been mentioning. So we'll get back to that one there. Even this last bullet point, which is mentioning exactly that, we'll come back to it. Now, D tells us entries in the cash journals for June 2023 that do not agree with the June bank statement. And so we have entries that we made in our cash journals that do not agree with the June bank statement. Now, we have deposit here, 31,500 Rand, and 2 EFTs here. So what does this mean? Well, here's what I'll say. When I read this, I thought there was not too clear a statement here, because it just says that it does not agree with the June bank statement. And so it's not too clear. They could have worded it better by saying that these were entries in the cash journals that did not appear in the June bank statement. Okay, so they could have told us that, but by virtue of them just saying do not agree is not too clear. However, the benefit of the doubt goes to the examiner, because we have to see if these 3 amounts appear in our bank statement. If any of these 3 amounts appear in the bank statement, then we know that it's fine. But if it doesn't appear in our bank statement exactly as it is, then we know that that bank statement has not captured it. And you can see we've highlighted everything that appears on the bank statement, with the exception of the 540 Rand, which we'll come to in the bank reconciliation statement. And so 31,500 Rand does not appear in the bank statement. 9,700 Rand does not appear in the bank statement. 13,300 Rand does not appear in the bank statement. What does that mean? It means that it's not been captured yet by the bank. It's not been taken into account by the bank yet. So where will it appear? In the bank reconciliation statement. Remember what I've been mentioning. Whatever does not appear in the bank statement and it's supposed to appear there, we will record it in the bank reconciliation statement. Or if a mistake or an error was made by the bank, we'll correct it in the bank reconciliation statement, as we will do for the transaction fees. So let's keep going, because we'll come back to this one here when we're doing the bank reconciliation statement. It doesn't affect our books because it's entries that were made in our cash journals already. So it's been made in our books, doesn't affect it. Let's look at E. The owner withdrew 11,000 Rand from an ATM to pay wages on the 29th of June 2023, but did not inform the bookkeeper. And so the owner withdrew 11,000 Rand from an ATM. Now, you'd be expecting to see this 11,000 Rand in your bank statement for June. However, it's not there. So what does that mean? Because the owner withdrew from the ATM, so surely it should appear in your bank statement. Well, there's an important note that we need to take into account that you always need to be on the lookout for. What is the cut-off date of your bank statement? This bank statement that I received here, when did I receive it, or until which day of the month is it? Well, if we go back here to the information, we are told here the information relates to Mango Traders for June 2023. The business uses the official bank statement, which is received on the 26th of each month. So this bank statement here was received on the 26th. That means any transactions that happened after the 26th of June would not appear in your bank statement. So you need to include that transaction in the bank reconciliation statement. So this one here, there are 2 places we need to record it. Firstly, the owner withdrew the amount and did not inform the bookkeeper. Remember, I've already mentioned, if they didn't inform the bookkeeper, we need to record it in our books, because the bookkeeper would not have recorded it in our books. He or she didn't know about it. So let's record it in our books here. Remember, it's a withdrawal, money coming out of our account. So we're going to put it under the total payments column, 11,000 Rand. Okay. And then where else do we need to record it? We need to record it in our bank reconciliation statement, because it's a transaction that happened after the 26th of June, and obviously it didn't appear in our June bank statement. So it needs to go into the bank reconciliation statement to show what you expect to see in the bank statement for July, okay, for the following month. Okay, so we'll come back to this one here. I've not highlighted it as yet. Okay, and you can see that's everything that we have gone through that needed to be in our books, because the rest that are not highlighted need to go into the bank reconciliation statement. Okay, we've already taken into account everything that needed to go into our books. So all I need to do is to total up the total receipts and the total payments and see how much money came in, that's total receipts, and how much money went out, that's total payments. So let's sum them up and see. The total receipts here is 98,840 Rand. And what about total payments? Well, how much is it? It's 138,660 Rand. Okay, so this is how much money came into our account in the month of June, and this is how much money left our account in the month of June, 138,660 Rand. So we are done with that one. Now let's move on to this one here, where we are asked to do the bank balance in the general ledger on the 30th of June 2023. So how much is our bank balance in the general ledger, meaning in our books, on the 30th of June 2023? Well, I will take my total receipts minus my total payments. However, there's something else I need to take into account. I need to ask myself, how much money did I have at the beginning of the month, meaning the 1st of June 2023? because I will need that. It's the opening balance, how much money I had at the beginning, plus how much money came into the account, 98,840 Rand, minus how much money left my account during the month, 138,660 Rand. And that will give me the bank balance in the general ledger. So let's find our opening balance here. We can see we are not given any obvious amounts here. But what I can tell you is that the bank reconciliation statement for May captures our closing balance for May in the general ledger. Okay, so that means our closing balance for May is the same as our opening balance for June. So let's see our bank reconciliation statement for May. You can see here at the bottom it's written favorable bank balance on the bank account in the ledger. Okay, this is how much was sitting in our bank account at the end of May 2023, and it's obviously the same as our opening balance for June. The balance at the end of last month is the same as the opening balance for this month. Okay, so our opening balance was 49,100 Rand. Okay, I hope it's making sense. You will find it in the bank reconciliation statement for the previous month, and it's going to be written either favorable balance on the bank account or unfavorable bank balance. Okay, if it's unfavorable, it means you had a negative balance in your account. If it's favorable, as is the case here, we had a positive account. So I need to add the opening balance, 49,100. So let's do that here. Let me just show you how it's going to look. 49,100 plus my 98,840, which came into my account, and then we deduct the money that we paid out during the month, 138,660 Rand, and that will give me what my bank balance is at the end of June. So how much will that give me? That will give me a sum of 9,280 Rand. So that is my opening balance plus how much money came into my account minus how much money went out of my bank account. I hope that has made sense. I hope that was easy enough for you to do and to see how much your bank balance is at the end of the month. Now we get to the bank reconciliation statement. Finally, we needed this amount for us to do the bank reconciliation statement, as you will see shortly. Okay, so in our bank reconciliation statement, what is the first thing that we do? Well, let's look at May's bank reconciliation statement. It's saying favorable balance on the bank statement. Okay, so the first thing that we need to record is the balance as per the bank statement. What is the balance as per the bank statement? Well, let's write here balance as per the bank statement. Balance as per the bank statement. And what is that amount? Well, are we given the amount here? Well, let's see. We're not given the amount here, because if I look at F here, bank statement balance on 30th of June 2023, and we're given a question mark here. That means we need to figure it out. Now, if you look at the lesson that I alluded to earlier on the bank reconciliation statement, you will note that we were given in that scenario, but here we are not given. But let's say in your question, maybe you're practicing or you're looking at the different question paper and you are given, if it's a favorable balance as per the bank statement, it will be sitting on the credit side. If it's an unfavorable balance as per the bank statement, it will be sitting on the debit side. Okay, but since we are not given, it's going to be our balancing figure, because there's no other way we'll be able to figure out what our bank statement balance on the 30th of June 2023 is, unless we complete everything else on the bank reconciliation statement and then we get the balancing figure to see what that balance is. Okay, so we have to continue with the rest of the amounts that we need to put in our bank reconciliation statement, and then we'll come back to that at the end. So let's see, what do we need to record in our bank reconciliation statement? Well, I've already mentioned all of them actually as we're going through and saying this one here will need to be accounted for in the bank reconciliation statement. The first thing that we will need to record here is outstanding deposits. Do we have any outstanding deposits? Well, remember here we're told deposit on the 27th of June, and we know it didn't appear in our bank statement because there's nothing on the bank statement. But there's another way we know it didn't appear in our bank statement. It happened on the 27th of June while we received our bank statement on the 26th of June. So it happened the day after we received our bank statement. So it definitely didn't appear in our bank statement, and we need to record it. Okay, so I'm just gonna write here outstanding deposits. Okay, and you may have more than one outstanding deposit, so we only have one here. And here's a tip for you. Sometimes you will have your bank reconciliation statement for the previous month, which is this one here for May, and you will have outstanding deposits, and you may have an outstanding deposit which appears on the bank reconciliation statement but does not appear in this month's bank statement here. And there might be a note there telling you that the deposit that you received, maybe it was a check and you have not cashed it in June as yet. That means you have to include that deposit in this month's bank reconciliation statement. However, in this particular question, we have highlighted everything in last month's bank reconciliation statement. So we're not carrying anything over from last month's bank reconciliation statement to this month's bank reconciliation statement. Like I said, the only time we do that is if that amount has not yet been accounted for by the bank, okay? Or if it's a check, and it's usually checks which might not have been cashed yet by this month, and it might be cashed in the following month, so you'll have to include it in this month's bank reconciliation statement as well. But it's not the case in this question. That's just a tip for you going forward. So we need to put the only deposit here that we have, 31,500 rand. Now, which side are we going to put it? Are we going to put it on the debit side or credit side? We know that it's a deposit, meaning it's money that came into our account. That means a positive amount. So we need to put it on the credit side, 31,500 rand. Okay. So now I can highlight this one here because I've just completed it. And then EFT 944 and EFT 945. We know these are amounts that appeared in our books, as I've mentioned before, and didn't appear in our bank statement. So we need to record them in the bank reconciliation statement. So I'm going to write here outstanding EFTs. Okay, remember sometimes it's termed outstanding checks. That's if you're dealing with checks, but in this case we are dealing with EFTs, electronic funds transfers, and not checks any longer, okay, as per this question at least. So the two we have there is the 944 and the 945. So I'm going to write here 944 for the first one, 944. And what is the amount? Well, it's 9,700. And which side are we going to put it? Debit side or credit side? Well, remember, whatever money has left our account, we're putting it on the debit side. So I'm going to put 9,700 there. And then 945. 945. What is the amount there? That is 13,300 rand. So I'm going to put 13,300. And I'm going to highlight both of them. And then let's move on. E tells us that the owner withdrew 11,000 rand from an ATM to pay for wages on the 29th of June 2023. You know this one already. We've recorded it in our books because it was not recorded in our books because the bookkeeper wasn't informed. But I said we also need to record it in our bank reconciliation statement because it's a transaction that happened after we received our bank statement. So any transaction that happens after you receive your bank statement, you need to account for it in the bank reconciliation statement. So 11,000, it's money that left our bank account, so we need to put it on the debit side. Okay, so I'm gonna put 11,000 rand, and I'm gonna write here withdrawal and its wages. Okay, you can term it however you choose to, as long as you are mentioning exactly what happened. I don't think the examiner will penalize you there. Okay, and then what else do we need to take into account? So let me just highlight this one here. Well, the only other thing we have not highlighted is the transaction fees. Remember the one that was duplicated? Transaction fees was duplicated on the debit side. As you can see, it was on the debit side, so now we need to put it on the credit side to reverse that duplication. So I'm going to write here duplicated transaction fees, and the amount there is 540. Remember, it's going to be on the credit side to reverse the duplication there. Okay, and then what else do I need to do? Well, you can see I've already done this one, so let me highlight it. The only other thing that we need to do is the bank statement balance on the 30th of June 2023. So nothing else is not highlighted. In fact, let me highlight this ones here, which we had done earlier, or which were given as the opening balances for our total receipts and total payments. And so the only thing is F here. But before I get to F, the last thing I need to do, as you can see in last month's bank reconciliation statement, is to put the balance as per the bank account. Okay, balance as per the bank account. So I'm going to write here balance as per the bank account. And what is the amount there? Well, we've already calculated that. We know how much our bank account balance is as on the 30th of June 2023. Here it is, 9,280 rand. Remember us calculating that one? Yes, that one needs to go into our bank reconciliation statement. Are we going to put it on the debit side or on the credit side? Well, if it's positive, we're putting it on the debit side. If it's negative, we put it on the credit side. And it is positive. Remember, we had calculated it here. We took our opening balance plus the total receipts minus the total payments and give us a positive 9,280. So if it's positive, we're putting it on the debit side, 9,280 rand. If it were negative, we'd put it on the credit side. And by the way, the opposite will be the case for the balance as per the bank statement. If it's going to be on the credit side, it's a positive for us, or it's good for us. If it's on the debit side, it's an unfavorable bank balance, meaning we have a negative balance as per the bank statement. Okay, just need to take note of that. But now that we have taken into account everything that we needed to take into account, the only thing that's left to do here is to get the bank statement balance on the 30th of June 2023. How are we going to do that? Well, here's an easy way. We're going to sum up the debit side and sum up the credit side and see which side is bigger. Whichever side is smaller, we're going to put the balance as per the bank statement on that specific side, because that's where the balance as per the bank statement is going to be. So let me show you how we'll do this. Sum up the debit side. Okay, we get 43,280 rand, and then we also sum up the credit side. We get 32,040 rand. You can see the credit side is smaller than the debit side. That means the balance as per the bank statement will be sitting on the credit side. And so how much is that balance as per the bank statement? All I need to do is to take the total for the debit side, 43,280 rand, minus the total for the credit side, and I will get how much the balance as per the bank statement needs to be, 11,240 rand. And so if I write here 11,240 rand, you can see debit side now equals the credit side, and that's what I meant by the balancing figure. Okay, when you're not given the balance as per the bank statement, it's going to be your balancing figure, and that's how you go about doing your balancing figure. Okay, you compare your debit side and your credit side, you total them up, and then the difference between the debit and the credit side will give you the balance as per the bank statement. Whichever side is smaller, that is where the balance as per the bank statement will go. And the credit side was smaller here, our balance as per the bank statement went to the credit side. Okay, that means the balance as per the bank statement is positive, as is the case for the balance as per our bank account. The balance as per the bank account is on the debit side, that means it's positive. The balance as per the bank statement is on the credit side, that means it's positive as well. And that is how you go about doing your bank reconciliation statement. I hope this lesson was clear for you. I hope it made sense. I hope you've gained value from this lesson. And if you have, consider subscribing to our channel, like this video, and share it to those you think it might help. Till next time, cheers.